Good morning and welcome to NYSE TV Live. I'm Kristen Scholler coming to you from high above the trading floor of the New York Stock Exchange on this Friday. And we've had a lot to cover these past 5 days together. Well, today, Beazer Homes with the ticker symbol BZH is going to celebrate the opening bell with 30 years of listing here at the New York Stock Exchange. It, of course, is just one storyline that we'll be covering over the next hour, but certainly no shortage of things on tap. And Hurricane Milton has left millions without power in Florida. And our ICE meteorologist is going to join us to discuss the aftermath and which industries could face the longest road to recovery. Meanwhile, we'll take a closer look at the state of the housing market, especially when it comes to new builds. The National Association of Realtors Chief Economist Lawrence Yoon and Construct Connect Chief Economist Michael Geckes are going to fill us in on the latest developments in that sector. Well, later after Beazer Home rings the opening bell, I'll be joined by the company's chair and CEO, Alan Merrill, to discuss, of course, what is ahead for that company and what sets it apart from the competition. We'll also hit on what the company has planned during National Energy Month. Well, of course, we'll continue to keep our eye on the latest market activity, as we always do. Yesterday, the Dow and the S&P 500 retreated from Wednesday's record closes after September's Consumer Price Index report did come in just a hair above expectations. It was up 2.4% from the same time a year ago. And as for today, we'll see what impact fresh wholesale price data arriving just over a half an hour ago will have on Wall Street. Well, producer price index data coming in, and it was up 1.8% from the same time a year ago. The estimate was 1.6%, so a little bit hotter on an annual basis. Month over month, it was unchanged versus an estimate of a 0.1% gain. So certainly some progress there. Well, excluding food and energy, that core index was up 2.8%, a hair above the 2.7% expected. Month over month, up 0.2%, in line with expectations on the core basis. Of course, there's a lot to unpack today when it comes to Wall Street and all the data that's coming in. Of course, earnings season also in focus, with major financial institutions starting to report and kick off this third quarter reporting season. In fact, some NYSE listed companies are in the spotlight. Early this morning, JP Chase, Wells Fargo, and BNY were among the firms reporting their latest quarterly results. Take a look here on the screen. Of course, JP exceeding expectations on the top and the bottom lines. And that was backed by higher net interest income, or the money that this bank makes off of loans. That stock rising in the pre-market just about 30 minutes to the start of trade. Wells Fargo stock, last time I checked, also up. And that coming after that bank beat on earnings, but actually missed on revenue. So we'll have a lot of storylines to follow throughout this earnings season, especially as they pertain to you and your money. Back to our lead story. This has been the case really throughout the entire week. Hurricane Milton quickly moving into the Atlantic Ocean on Thursday after sweeping across Florida. And more than 2 million people without power now. And we had seen more than 100 tornado warnings stemming from this particular storm. Well, we have seen multiple people die from the storm and hundreds of water rescues occurring, according to officials. As we examine the toll and look to other potential storms on the horizon, I do want to bring in ICE meteorologist Dave Margolin with more. Dave, thank you so much for joining.
Thank you, Kristen.
What is the aftermath that we see of Milton this Friday morning?
Yeah, so recovery is in full effect now. We've seen outages across the region. This time yesterday, I think it was about 3.3 million. We're down to 2.5 million, so that's certainly a good story, but there is still a long ways to go. Some more good news. I believe the airport in Tampa was scheduled to reopen just about now. But the story's still mixed. The port of Tampa, for example, they're still doing assessment. We've talked about, I think, the last couple of days how important it is because it brings in so much petroleum. And I think as you go across sort of the rural inland areas of Florida too, those are more difficult areas to kind of get into, and the efforts there are going to take longer in terms of getting business operations back up to normal.
Those residents, of course, of Tampa fearing the worst, that a storm surge would cause intense flooding. But we actually saw the opposite effect, almost a reverse surge, sucking water away from Tampa. Why was that?
Yeah, so Tampa in particular was extremely fortunate, Tampa Bay. We were worried, a lot of the meteorologists were worried that they could see sort of that catastrophic worst case scenario. But what happened is that the storm ended up making landfall about 40 or 50 miles south of Tampa. Near Sarasota. That may not seem like a lot, but it's really important when it comes to storm surge, because when you think about a tropical cyclone, the winds blow counterclockwise. So the fact that the storm came into the south and the winds were blowing offshore meant that Tampa Bay was spared. And Tampa Bay in particular is extremely vulnerable, because with the storm surge, it's not just about the intensity of the storm, but it's about the sort of the configuration of the water near that location. And with Tampa, you have the offshore waters are relatively shallow, and Tampa Bay acts sort of like a funnel. So that area in particular is one of the sort of most vulnerable places in America for a strong storm surge.
Is it normal for a hurricane of this magnitude to lead to as many tornadoes as we saw stem from this?
No, it isn't. That was a surprise, I think, for most of the meteorologists, myself included. Normally when you think about kind of scenarios for a lot of tornadic activity, you think about Oklahoma, Texas. And one of the ingredients here, one of the main ingredients, is that clash of cold coming down from Canada and the warmth and the moisture coming in from the south. Well, you don't normally have those kinds of ingredients with a hurricane. So the fact that we saw over 100 tornadic warnings, I think there was about 50 reports of actual tornadoes, or 40 or 50 or so, was extremely unusual. And the truth is, we're scientists like myself, we're going to have to look into that and try to understand what happened with this particular situation.
Walk us through the numbers, Dave, of course, associated with these deadly destructive tornadoes, on top of what we've seen with the hurricane.
Yeah, so predominantly, or the majority of the tornadoes were sort of to the south and east of the storm. And that's pretty typical. So we saw across southern Florida, southeastern Florida, again, there were over 100 warnings that were issued, which I believe is one of the highest we've ever seen in Florida's history for any day. And there were reports of about 50, and unfortunately, there were somewhere around 6 to 8 casualties associated with it. So again, extremely unusual, and unfortunately at this point, we really don't understand why this hurricane produced so many tornadoes.
Based on your models, do you anticipate that we'll see more storms on the horizon?
Yeah, that's obviously a really important question, especially for residents of Florida who have now been through 2 hurricanes. The short answer is, for residents of the Gulf Coast, you still have to pay close attention, monitor those hurricane center forecasts here, I would say, at least into early mid-November. Why is that? Because even in a normal season, you would still expect maybe 1 or 2 more hurricanes before the end of the season. But this isn't a normal season, right? This is a season of above normal activity. We've already seen it. We're expecting to see above normal activity into November. In addition to that, some of the hurricane models, the forecast models that we have for next week, are showing the potential for more activity in the Caribbean Sea. So, for all these factors, I would say, again, if you're a resident on the Gulf Coast, especially eastern Gulf Coast, please pay attention to the forecast.
I know, Dave, you've been looking at the data so closely as our in-house ICE meteorologist. Anything else our viewers should know when it came to data storylines emerging from this particular storm?
Well, I think, some of the things you already touched on here. We have to try to understand why we saw so much tornadic activity. That was not one of the expected impacts that we thought we'd see. The other thing, of course, is always with the track and intensity forecast, right? Although I think from a high level view, you can say the forecasts were good. We did see some surprises in terms of the intensity. First, initially, how strong it got, and then the weakening near shore. And then, of course, that final track forecast, which shifted a little bit further south. So these are all things that I think we're going to be looking at and trying to improve over the coming years.
Give our viewers a sense of your day-to-day as ICE's in-house meteorologist. What exactly does it entail?
Lots of data, I would
Yes.
say, to start with. So, in our ICE platform, ICE Connect platform here, we focus on 2 areas, the historics and the forecast. So we've got data going back 30 plus years, global data for over 6,000 locations. We're always working on updating that. And then there's the forecast. We've got the various different global models that users can use, both in terms of data and maps, to assess variables across the surface and all the way up to the stratosphere.
And I heard that there's actually some snow, early signs of snow, believe it or not, here in the Northeast. What is the data showing on that front?
It is hard to believe we're talking about snow after this week, but there has been the first sort of accumulating snow for the snow lovers out there in some of the higher peaks in New England. So it's a little bit of harbinger of things to come for those ski lovers up there.
Can we expect a warmer winter or a colder winter than expected this year?
Two thoughts on that. So most of the forecasts that are out there right now are suggesting that we are going to see an above normal temperature year. So for snow lovers, that's not great to hear. But the seasonal forecasting is still a very difficult sort of and low confidence kind of forecast. So despite the fact that the forecasts are warm, I would say again, as we get closer, we'll know more in terms of what to expect.
Okay, Dave Margolin, thank you so much for joining, of course, our in-house ice meteorologist expert. We appreciate that, Dave. And if we can, let's take a look, at least here at markets. I can see them from my purview at the stock exchange. All of this coming as stocks are set to open pretty mixed. Nothing to be too concerned about. Producer price index data showing the main theme, which is that inflation continues to cool. And that's exactly what the Fed wants to see as it continues to embark on rate cuts ahead. So the producer price index gives us a sense of what businesses get, the prices that businesses get for their goods and services. The consumer price index, of course, following the prices that we pay as consumers for our own particular items. But PPI, very much a leading indicator, usually by about several months or so, because we know businesses then ultimately pass those prices on, in many cases, to the actual consumer. So we've got the inflation data behind us. We've got earnings season underway, kicking off unofficially today with those bank results. And we will have a lot to cover down there on the floor of the stock exchange. Before we make our way down there, let's take a look at those executive remarks now underway in the New York Stock Exchange's boardroom. All right, I think we are not going to go to the boardroom. I'm going to wait to get a cue, but maybe we can take a break and then see you on the other side.
So I want to start off by talking about the company. Tell me about CloudWalk.
So CloudWalk is a payment company, a fintech in Brazil. We have like 1.7 million customers, SMB sellers, who use our payment products and banking solutions to sell more, receive money in a couple of seconds, and grow their business. So it's one of the fastest growing companies in the whole planet right now. You're crossing $500 million in revenue, $84 million in net income, growing high double digits. Like, we are booming, growing really, really fast.
So you've made your debut in the US this month, your first market outside of Brazil. Tell me more about the launch of Gym.com.
So Gym.com is a beautiful product. We are bringing AI, tap on phone, and instant payments to micro sellers. So every time a micro seller wants to sell something and receive like in a couple of seconds, they can use Gym.com. And when they receive the money and they need help to expand that money or define better price or get more customers, they can use the Gym itself, the agent, the AI agent on the app to help them. So it's a product we're bringing to US to fix the biggest problems that SMB sellers have here in the United States.
So you mentioned that Gym is based on AI, tap to pay, and instant payments. Now, do you believe that these are the major trends in the financial market?
Yeah, these are big trends. For example, tap on phone. That enables you to have your smartphone, iPhone device to be like a card payment machine. So your consumers can just tap the card in your smartphone and then can receive the money in a couple of seconds. And a couple of seconds means that you're using instant payments to pay all the sellers. And finally, when you have like all the sales and all the purchases you need to do, you can use the AI agent to help you. And these are major trends that are reshaping.
Welcome back to NYSE TV Live, everyone. Beazer Homes celebrating the opening bell today to celebrate 30 years as an NYSE listed company. We'll be talking with the chair and CEO of Beazer Homes later after the opening bell. He'll join me on the floor. Of course, we might be able to pull this up on the screen here, the company's official stock certificate. And this is what it was like when this company issued shares here back in 1994. Had to meet the NYSE's high standards for engraving and rules governing the images pictured in the vignette. At the time of the listing, Beazer Homes was building and selling single-family homes in 16 markets across the Southeast and the Southwest United States. Well, of course, we'll tell you more about Beazer Homes later in the show, as I mentioned, but I do want to bring in my colleague, Trinity Chavez. She is joined by an economist to talk what we need to know about this housing sector. Trinity, with so much housing data in focus of late, including what we'll hear from Beazer Homes soon. Trinity.
That's right, Kristen. We're going to be speaking to our guest here in just a few moments, because as home buyers are facing increasing volatility from rising interest rates to persistent supply chain disruptions, the impact on new home construction is front and center. So what does this mean for the overall housing market, and what does it mean moving forward? Here to break it all down is Lawrence Yun. He's the chief economist at the National Association of Realtors. Lawrence, thanks for joining us.
Sorry, I don't hear anything.
Oh, now I hear you. Okay, I'm sure we're going to get those audio technicalities ironed out, but it's great to have you on the show. I want to ask you, how have recent economic conditions, such as rising interest rates and inflation, impacted new home construction activities, and what are builders doing to navigate through all of these challenges?
Anything. You have to unmute your microphone.
Okay, I believe that we're having some technical difficulties at this time, which I'm sure that we are going to get addressed in the control room momentarily. But to preview that conversation, we're going to do a deep dive into the overall housing sector and talk about all of the labor shortages that have been really a consistent issue in the construction industry, and the overall impact and how it's affecting the pace of new home development. And we're going to get into all of that and so much more. But right now, we're going to take a quick break, and we'll see you on the other side.
So now, Michael, with your deep experience in international banking, what have been some of the main strategies you've introduced to reshape HSBC's operations in the U.S. and Americas?
Okay, well, it's a great question. So it's really focusing on what we do as a company, and that's to support our clients internationally. When you think about it, 62 countries, and so we're here to support American companies as they go abroad, all around the world, in various countries, and also to help non-American companies, foreign companies operate in the United States. And so it's access to the deep capital markets, such as the New York Stock Exchange, access for our wealth clients investing in the United States and all its many different options that it provides, but also providing assistance, support, banking products, services, advice to all of the companies, the U.S. companies who want to operate abroad. So it's all about being international, and that's what we focus on here.
Now, you recently moved your U.S. headquarters to New York City at Hudson Yards. So how does this align with your broader goals in the U.S.?
Yeah, that is a great move. Hudson Yards is a wonderful development, the heart of New York City, the financial capital of the world. So we're very happy to move there. We're in a great building, the Spire building, which really is a fabulous new headquarters for us. And what we wanted to do is, one, show our commitment to our colleagues, to our employees, but also to our clients, the community, and to New York City. And secondly, design a environment where people want to come back to work. So we're a hybrid. We don't have a mandate to come back full 5 days. But what we did is really create an environment of collaboration, ideation, and an environment where people want to come back to work. So I don't have to force them. They come back on their own accord. And right now we have 80% occupancy, which is pretty stupendous given where we were before, which is less than 40%. So we're very happy about the results.
That's quite a high occupancy.
Very much so.
Now, your innovation banking franchise is celebrating its 1-year anniversary.
Welcome back to NYSE TV Live. I'm Trinity Chavez, and apologies for the technical audio issues that we were experienced to our audience and everyone who is watching at home. But I'm going to bring back Lawrence Yun. Lawrence, I believe that we have all of those issues sorted out. You can hear me okay?
Good morning.
All right, thank you so much again for joining us. So let's just talk about how the recent economic conditions, such as rising interest rates and inflation, have impacted new home construction activity, and what are builders doing to navigate through all of these challenges?
No, I think there is some caution as well as optimism. The caution is that interest rate, even after the Federal Reserve rate cut, have been rising in the past 5 days, 7 days. But let's remember, it is measurably lower now compared to 1 year ago. 1 year ago, it was about 8% average mortgage rate. Today, it is around 6.3%. That is 170 basis point lower. And furthermore, we still have housing shortage. Based on the job addition that's happening in the country, population growth, we still estimate roughly 3 million housing units short. Therefore, builders need to build more. But I think temporarily, with little fluctuation, uncertainty related to mortgage rate, there's some bit of caution.
Wow. And you know, labor shortages have been a consistent issue in the construction industry, as you mentioned. So how is this affecting the pace of new home development, and what long-term solutions are being discussed to address this?
One looks at the typical wage of the construction worker in the residential housing for home building. It is much higher than the national average wage rate. Furthermore, the wage growth, how is it rising from 1 year ago, is rising faster. So naturally, one would anticipate that the market forces would attract more people into the construction industry. Yet, the number of people going into trade school or going into construction industry still remain relatively short. Therefore, I think we need to begin to talk about broadly about how the market forces. Some people go to college, some do well, but others are coming out with huge student debt. While people who are going to trade school, no student debt, they're getting paid immediately, getting the solid middle income, and they are able to buy a home, be part of that American dream. So we need to begin to change the narrative to attract more workers into the construction industry.
Now, in terms of supply chain disruptions, what specific materials or stages in the construction process are experiencing the greatest delays, and how are builders adapting to keep projects on track?
Overall, the lumber prices, which had been a big issue a couple of years ago, now that is functioning pretty well. So the lumber prices have come down almost back to normal conditions, good operation. And of course, there will be some supply issues, supply chain issues on some specific material, but right now we're not seeing any one particular that is prolonged, not persistent. So maybe one item, like garage door, may not arrive on time to complete the home construction. But overall, supply chain, I think, is pretty much diminished. It's not an issue anymore. But what is a bigger issue is really about the local government, state government on the zoning regulation, or huge fee required to take out a housing permit. In California, more than $100,000 just to take out a housing permit. So one can say that sometimes the government is getting in the way. So if we can remove some of the barriers, make it easier for the builders to get into the action, then we can relieve some of the housing shortage.
And let's talk about the different regions and how they differ from around the country. What shifts are you seeing in the demand for new housing when we look at it from this vantage point, and how are builders responding to these regional variations?
Overall, the newly constructed home sales are rising, while the existing home sales, which typically used to be about 90% of the market, still is trying to get back on the recovery. But the newly constructed homes, what the home builders are doing, even with some incentive offerings, they're able to turn profits. Broadly speaking, it's the southern state and the Rocky Mountain state that is doing very well for the builders. There's more restraint in the New England states. Trying to get that housing permit is difficult, but the prices are very strong in the New England region. And on the West Coast, I think just the high price point, and again, some of the government regulation may be deterring builders from becoming very active. So really, the South and the Rocky Mountain states doing very well.
Now, considering the current economic environment, and we are in an election year, what do you see? What is your outlook for the new home construction sector over the next 6 to 12 months? And do you anticipate any specific policy changes will influence or impact the sector?
Looking at broadly, looking at the longer term horizon, say to 2020, end of 2025, end of 2026, I believe the building activity would rise roughly 15% each of those years. So given the housing shortage, I think there's a financial incentive for the builders keep adding to the supply. Related to the policy issue, we just need to make sure that there is no additional onerous, burdensome activity. President Trump has talked about opening up some of the federal land in the Rocky Mountain state so that more homes could be built. Vice President Harris has talked about reducing some of the regulations so the builders can be more active. So at least that both political parties are recognizing the need to build more. We just have to overcome and let's have some consistency because we need to relieve some housing shortage that is in the country.
Now, when it comes to consumer preferences, especially when it comes to sustainability, energy efficiency, and working in remote places, what are the biggest trends right now on a consumer level?
The builders have been actually building more smaller size home recently. Maybe that's just because there is a lack of inventory on the existing home side and lack of affordable housing. So rather than building those big mansions, the builders are beginning to build more smaller size home, but it's occurring in the outer suburbs. So maybe because of the new remote work policy for many organizations, roughly speaking, 3 days a week, come to office, other 2 days work from home, so the commute time is less important. Therefore, outer suburbs or even smaller town communities, there is a potential. And I think from consumer preference, this is a trend that we are seeing, and maybe the builders can meet those consumer preferences.
A lot to look out for and a lot of important information. Thank you as always. That's Lawrence Yoon. He is the Chief Economist for the National Association of Realtors.
Thank you.
Now I am going to bring in Kristen Scholler in Studio One. Kristen, I mean, he really pointed out a lot of important information there, especially as we are seeing different trends in the current housing market because of the economy.
That's right, Trinity. And I do want to talk about Beazer Homes a bit here because the crowd is piling in to the floor of the stock exchange. Our viewers can't see it just yet, but that is our tease as to what's ahead, because in a few moments, Beazer Homes is going to celebrate the opening bell to kick off the final trading session of the week. We are still looking to add gains for the major indexes this week. The S&P looking at its 5th straight week of gains. And as we mentioned earlier in today's broadcast, Beazer Homes engages in the design and sale of single-family and multifamily properties across the United States, especially in the West, the East, and the Southeast regions. During Beazer Homes' third quarter earnings call in early August, the CEO, Alan Merrill, pointed to strong performances in markets like Southern California, Las Vegas, and Virginia. And on that same earnings call, Merrill also said that Beazer Homes is making significant progress toward its goal of 100% of its housing starts to be zero energy ready by the end of 2025. Well, in fact, it ties into why the company is here this morning. Trinity, I think more than 100 people here down on the floor of the stock exchange as we get ready to celebrate this opening bell. Great insight from Lawrence, as always. Beazer Homes has been a staple here at the stock exchange. And again, investors very optimistic. We've been seeing a very resilient market heading into some major market events like earnings season getting underway.
Yeah, and I do know that you also are going to be speaking to Tim Bowler, who is the president of IMT here at ICE. I mean, can you give us a little preview as to what that conversation is going to be about?
Yeah, so I am looking forward. ICE Mortgage Technology, one of the key businesses of Intercontinental Exchange, and Tim Bowler is going to join me on the podcast. We're going to record that just after this show ends. There's so much to cover when it comes to the housing market. Doing it after the Beazer Homes celebration is a great time, plus learning more about how our viewers can really harness some of this technology to make smarter decisions, more efficient decisions, and transparent decisions when it comes to buying a home and, of course, owning a home, that process as well. So given this current housing market with rates as high as they have been, this is a very timely segment. Trinity, I think we are just moments away from this opening bell. And so let's take a listen as Beazer Homes celebrates 30 years listed at the New York Stock Exchange. Welcome back to NYSE TV Live, everyone. We just saw the opening bell here at the New York Stock Exchange. Stocks opening a bit flattish, but remaining right near record highs again as the S&P is looking to notch its 5th straight week of gains. So joining me now to talk all things markets is Sam Stovall. He's a chief investment strategist at CFRA, a financial intelligence solutions and insights platform. Sam, it's great to get your take, especially as we are early on in the 4th and final quarter and as earning season starts. So I know your recent research highlighting that this weekend, in fact, marks the 3rd birthday of this bull market, with the S&P bottoming on October 12th of 2022. What has changed for stocks and investors in the past 3 years?
Good morning, Kristen. Well, you're absolutely right. We started the 3rd year, or will do so on Monday. The 2nd year ended up being a very strong one, up 33%. What makes me sort of wonder what's going to happen in the 3rd year. Will it be similar to history in that we have a pretty challenging 3rd year of a bull market, mainly because prices have advanced so much. Valuations have been stretched, and this time around we're looking at a PE on trailing 12-month earnings of 25, which is essentially a 55% increase to the average of bull markets going back to World War II. So I would tend to say that there's an awful lot of optimism, and we would certainly need to see earnings growth accelerate in order for these PE ratios to come down.
Does history indicate that we can see stocks continue to climb from here?
Yes, but modestly so. Every bull market that celebrated its 2nd birthday, they obviously didn't go on to celebrate all of them on their 3rd birthday. 3 of them actually fell into new bear markets. 2 of the 11 ended up in negative territory, but not enough to be called bear markets. 3 additional ones had sub-average returns of about 6.5% or less. So really the odds favor a less than average return in 2025. So I would say something for investors to watch for.
Okay, very good to know, especially as people might consider updating their portfolios heading into year-end, Sam. So I mentioned we're starting the 4th quarter and we are approaching a presidential election. What seasonal trends do you think investors need to be aware of, especially these next few weeks?
Well, the October is one of the 2 worst months in succession in an election year. September and October are the 2 negative months. But then once the uncertainty of the election has run its course, investors tend to flock back into stocks that all sizes, all styles, all sectors have posted average increases in the final 2 months of election years since 1992, and 97% of all sub-industries were in positive territory. So essentially, the final 2 months tend to be very good to investors.
I know 3rd quarter GDP rising an impressive 3%, especially as questions are still out there as to whether or not the Fed can engineer a soft landing, Sam. But with corporate earnings season now underway, what do you think it needs to deliver, these companies and their results, in order to justify some of these current more lofty valuations?
Well, I think that management needs to sort of brush aside the third quarter results, which are expected to be pretty minor when compared with the prior quarter. When we started the reporting period for the second quarter, expectations were for an 8% growth, and we ended up with 13%. However, for the third quarter, it too was expected to be up 8%, but now it's likely to be up closer to 3%. So maybe the old adage that rarely do you injure yourself falling out of a basement window will apply, but I think we have to get more favorable comps and more favorable guidance for Q4 and into 2025, I think, to make investors feel better.
We've had several inflation reports this week, including the producer price index this morning. Does that change your view on rate cuts at all?
Well, it brings it down to what we had initially thought to begin with, that we would not see another 50 basis point cut in 2024, that the final two would likely be 25 basis points, and that we would have 4 quarterly cuts of 25 basis points in 2025. So the Fed is in no hurry, and as Fed Chair Powell said at his most recent press conference, that in a sense it's a hawkish hedge, that yes, they will cut rates if data say that they should, but in the meantime, they're going to take a very measured approach.
Sam Stovall, Chief Investment Strategist at CFRA. Sam, always a pleasure. Thanks for joining.
My pleasure.
International Day of the Girl is today, and so stay with us to hear what the co-chair of Amplify Her Foundation told me when we come back.
Orion is a global leader in the carbon black industry. Carbon black is used in a lot of products. It's used in in vehicles and tires. It's used in a lot of the rubber around within your vehicle, within a car. It is used in a lot of specialty markets. It's used in the fiber market. So, for example, athletic wear. It's used in the ink market. The number of ink opportunities. There's used in the coatings market. So if you look at a high-end coating on a car, for example, you'll see it there. And really importantly for us, it's used in the electrification industry or market. And what I mean by that, so looking at EV batteries, as you're seeing the evolution toward electric vehicles, we have products that go into EV batteries. We also have products that go into high-end voltage cables. So for example, those that come from wind farms or from solar farms to transmit the electricity. So our products go in all those areas. We're a company that has 15 manufacturing facilities. We're building our 16th one right now in La Porte, Texas, just 30 miles away from here in Houston. We're in 5 continents. We have about 1,600 employees across 80 countries, so we're a very global company. We've been around our heritage goes back over 150 years. For a long time, we were part of a specialty chemical companies within Europe. For a few years, we were private, and in the past 10 years, we've been a public company.
So now, while you are a part of day-to-day items that everyone touches, Orion's not a company that's really well known. So what are some aspects of the company that are not well understood?
I talked about the carbon black industry. For a long time, it was an industry that was, its profitability was kind of mediocre, didn't have the financial wherewithal to reinvest in itself, not just Orion, but across the industry.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the trading floor. Well, each year on October 11th, today, the world comes together to recognize the International Day of the Girl. This event provides an opportunity to celebrate the leadership of girls around the world and commit to addressing the barriers that could limit their full participation. Well, according to research from UN Women, the United Nations organization dedicated to gender equality and the empowerment of women, there's plenty of work left to be done. Here's some of the sobering data points. More than 119 million girls are out of school, down by just about 4.3% since 2015. By the time they're 19 years old, 1 in 4 adolescent girls have experienced abuse by a partner, and 9 million girls will be married as children by 2030. As part of the recognition of this day, the Amplify Her Foundation, which says it is on a mission to support women and girls from underserved communities to become transformative change makers, is hosting its inaugural Give to Women and Girls Day event right here in New York City. Earlier this week, I spoke with Maya Molina-Schaefer. She's a co-chair of Amplify Her Foundation's Leadership Network about how this organization is supporting a cause. Take a look.
We are partnering with the Women's Philanthropy Institute, and we are co-hosting the inaugural Give to Women's and Girls Days event at the New York Historical Society on Friday from 10 to noon. This is going to be just a powerful celebration full of dynamic dialogue. We have an incredible lineup of guest speakers. And not only is it going to be a free in-person event, but we're also live streaming it. So no matter where anyone is, they could be at work, at home, traveling, they can join us to galvanize support and awareness for these really worthwhile organizations.
What are you hoping comes out of this event?
So we are just really excited to bring awareness to these incredible organizations on the ground right now that are really addressing the systematic challenges that girls and women are facing today in our communities. We're hoping not only to gain funding for these organizations, but we really want to come together as a community and really drive systematic change and create a world that's more gender equal.
I see that Amplify Her Foundation will be giving $1 million in grants to organizations. What are some of those organizations? What are the causes that they specifically support?
Yes, we are so excited because on Friday we are going to be announcing our 2024 grantee partners. Our partners are diverse organizations from across New York City that are supporting and addressing, again, those challenges that women and girls are facing in underserved communities in New York City right now. All of our organizations are on the ground, making real impacts. I've seen them firsthand. I've visited a multiple of those organizations, and they all fall in about 5 domains that we focus on. We have girls leadership, women's entrepreneurship, equitable representation, and advocacy.
I'm curious, too, as a leader yourself, part of the leadership network, how you're finding your own experience in guiding really the change makers of today and tomorrow.
Absolutely. So the Leadership Network is an incredible group of professional women from very diverse backgrounds and lived experiences. And we all come together because we're at a point in our life where we turn around and we want to lift as we rise. We want to invest in our communities, and we want to eradicate the barriers that we as girls faced growing up in these communities. It's our time. And our sole focus is to help guide, support, and advise Amplify Her Foundation grant-making process. At the end of the day, we want to pick grantee partners that are diverse, inclusive, and really reflective of the community's needs right now.
Many women have their own story of hardships that they've faced and how they've leaned on their own network to make it through and come out on the other end where they can actually move from surviving to thriving. What of your own experiences have really shaped your ability to transition in life and take on a leadership role?
Well, I did grow up in a single mother immigrant household. I learned the value of hard work and grit very early on. I learned the value of hard work, but also I benefited from organizations like the ones we're investing in today. I was provided opportunities to increase my leadership skills. And honestly, at the end of the day, it's about opportunities. It's about opportunities for education, to have role models that you can look up to and you can see, hey, I can be that. I can be a journalist that works in finance. I can be a CEO of a multi-million-dollar company. There are no boundaries anymore to what women and girls can achieve.
Maya, for our viewers who can follow along on the live stream, of course, for the event on Friday, we will be supporting you and watching. How can people also donate to the causes that do matter so much that we've been discussing today?
Yes. So I think supporting women-led and supporting girls and women organizations is the single most impactful way that someone can help for gender equity. And so what they can do is they can register for an event if they're available to attend at www.womenandgirlsday.org.nyse. And they can.
Thanks to Maya Molina, of course, for that interview earlier. We'll be sure to watch the rest of the interview on tv.nyse.com or on our social media platforms. Earlier this hour, Beazer Homes CEO Alan Merrill rang the opening bell, and he is going to join me on the other side of this break.
Level 10 is a Seattle-based software company. We build transaction infrastructure to help companies decarbonize. we help them do better deals faster. And we do that with an ultimate goal of making it as easy to purchase renewable energy as it is to purchase fossil energy.
And tell me about the biggest trends that you're seeing right now in the renewable energy sector.
So the first trend is a supply-demand imbalance, right? And so on the demand side, there's just massive electricity load growth. In the last year or two, load growth forecasts by utilities have more than doubled. And we expect that to continue. So that's AI, that's electrification and electric vehicles, that's policy-driven industrial growth. So all of those things come together to create this massive demand spike. The supply side is very different. It's been largely stagnant. There's permitting delays, there's interconnection delays for new renewable energy projects. So those two things together kind of create an upward pressure on pricing.
And how do you see IRA legislation impacting this market?
Two major developments that it brought. One, it gave us a runway, so in terms of the tax credit certainty. So renewable energy in the US is driven in large part by the federal tax credits. The second is that it brought a lot more financial flexibility. So those tax credits, usually the developer doesn't have the tax appetite to use them. So they had to bring in a handful of banks to monetize the tax credit, and that created a bottleneck. One thing the IRA did was that it gave developers the ability to sell their tax credits to a broader pool of corporates with tax appetite. And so that created a lot more financial flexibility and really a mechanism to realize the full potential of the IRA.
So I know that level 10.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler down here on the floor of the stock exchange, joined now by the bell ringer himself, Alan Merrill, Chair, CEO, and President of Beazer Homes. Alan, welcome.
Thank you. It's nice to be here.
We're so happy to have you here today. 30 years listed as an NYSE company. Congratulations. And why was this the right month to celebrate?
So we're excited about being 30 years, but this is National Energy Awareness Month, and we wanted to ring in that month because that's a big part of what we do as a company.
How does that factor into what you're doing in the homes that you're creating?
So we're building what are called zero energy ready homes, which are the most energy efficient homes in the country. They're 40 or 50% more efficient than regular code built homes. Saves consumers an awful lot of money, but we're the only ones doing it.
I want to talk more about the pricing that you're seeing on the supply chain. Of course, we had two inflation reports back to back yesterday and this morning. Have prices eased at all? What are some of those trends?
So for us, I mean, we really are focused on affordability for our home buyers. So we have long-term relationships, multi-year agreements with our primary trade suppliers. So we're not as affected by day-to-day, week-to-week adjustments. I can say over the last year, we have seen some downward pressure in commodity prices, and that's certainly been helpful, and we've been able to pass that on to home buyers.
I know you do build in some areas, at least in the South, and of course we've been covering Hurricane Milton, Hurricane Helene of late as well. How does your company react to something like that? What is the business impact?
Well, it actually starts with site selection. We want to make sure that we're building in the most resilient places that we can, and then it's the land development of the sites that we develop that we make sure that they're up high enough so that they're not affected by storm surges, and then it's about the materials we put in the home. But when a big storm like Milton is coming, we close our sites and our offices days in advance, secure the sites, and then we'll make sure that our team gets home to take care of their families well in advance of the storm.
Affordability has been such a key component of this housing story of late, really since 2022. How are your homes trying to make it more affordable for the average person to really get in?
Well, energy efficiency is sort of that unseen cost in home ownership by a lot of home buyers. So reducing energy costs by 50% makes a huge difference, and it makes home ownership attainable for a group of people that otherwise wouldn't.
Alan Merrill, thank you so much for joining. Congratulations. 30 years listed here at the New York Stock Exchange. It's great to see. Again, Alan is the CEO of Beazer Homes. Well, we have more to talk about when it comes to housing after this short break. Stay with us.
Joining me today on NYSE Floor Talk is Marcelo Bacci. He's the CFO at Suzano. Marcelo, it's wonderful to see you again. Thanks for joining me.
Great to be here again with you, Judy.
Thank you. So now, Marcelo, Suzano is completing the largest investment cycle in its 100 years history and will soon begin operations on a new factory in Brazil. So tell me, how does this impact the company's future?
Really, this is going to be the largest single line of pulp production in the world and the most efficient one in terms of cost of production. So this is going to be a big transformation for the company in terms of helping us deliver one of our main objectives, strategic objectives, which is to enhance our position as the lowest cost producer of pulp in the world. So this plant is a 2.5 million ton plant, which is huge. Will increase our capacity by something like 20% in a very, very efficient way. So we are very excited about this, and it comes, at a very special moment in our history, which is when we completed 100 years.
We typically see companies pressuring their financial leverage while making large capital investments. How has Suzano been able to manage its balance sheet along the current investment cycle?
Yeah, that's a huge change for our industry and for our history at Suzano. Before this investment, I think every time a company would come with a plant of that magnitude, that would be a big step in terms of their capacity, which was our case last time. And now, although this is a very large plant, we have already a large base. So we have been able to make that huge investment. It's a $4.3 billion investment, leveraging up our balance sheet up to 3.5 times.
Now, as we continue to navigate the complexities of the housing market, new residential home developments are facing a myriad of challenges and opportunities. Joining me now to dive into the very latest data and insights on the residential construction trends is Michael Gux. He is the chief economist at Construct Connect. Michael, thanks for joining us today. I do want to talk about your recent report for Construct Connect. You noted that a decline in abandoned or paused projects that are currently on the market. So talk to me about the key factors that you think are driving this change among owners and developers.
Yeah, that's a great question, Trinity. And I think a lot of it comes down to the financing environment. There has to be a right and efficient interplay between banks and financial partners, and of course those owners and developers looking to build the future infrastructure of the nation. And so that's been the big challenge, is making the financing work. And as the Federal Reserve has signaled, right, in recent months that it's going to lower rates and maybe even more aggressively than some of us initially thought, that has done a lot to help lower the number of forthcoming and potential abandonments and projects on hold. I think both the owners and developers and maybe the financial sector are both becoming much more optimistic about it, and that's really going to help propel future growth.
Now the PSI, or Project Stress Index, also rose from 87.9 in August to 102.6 in September. What do you think caused this increase in the market sentiment?
Well, I wrote about that. I said maybe we were buying the rumor and now we're selling the news. And part of that is we have to remember that 87 figure was historically low. That was really a multi-year low. So to come back up to around a level of 100 really puts us back at a level that we were at in 2021, which was not a bad year at all. So keeping it in historic context, it's really a fine reading. We aren't very concerned about that part.
With the September PSI at 102.6, what does this say about the current state of the construction market compared to last year?
Oh, it's getting vastly better. I think expectations for financial markets, the availability of capital moving forward is going to improve, and that is exactly why we're seeing the improved numbers that we have over the last 6 to 9 months.
And after the Fed's interest rate cut, do you expect more new projects to start, or are there still challenges that could hold back growth?
Well, the financial challenges should ease, which is a great thing. Some of the other challenges, though, remain, things like regulatory environment, and then, of course, labor and materials access. Those continue to be real challenges, and we see that in the labor cost figures, more so than right now what we're seeing on the material cost side. We really need to figure out a way to make laborers more productive. That's really one of the biggest challenges holding back future construction growth.
And you recently cited that the idea of buy the rumor and sell the news could apply to the construction industry right now, especially with recent interest rate changes. Explain exactly what you meant by this.
Absolutely. So, of course, owners and developers are looking years sometimes into the future, right? They're going to build a structure, and then it may not begin turning revenues over or making a profit for years to come, right? And so, of course, they're trying to predict that market, and so things like the Fed signaling become really important to them, because it makes all the difference about whether those projects pencil out or not. And so as our interest rate expectations across both the financial sector and within construction change and evolve, right, that's going to affect how willing I think owners, developers, and the financial community are willing to invest now in projects that may not see a profit for 1 to 2 years or more to come.
Thank you so much, Michael. Again, Michael Gooks, Chief Economist at Construct Connect.
Thank you.
Now I'm going to bring in my colleague, Kristen Scholler, once again, so we can close out this show, Kristen. It's been a great show, very eventful.
It has been very eventful, Trinity. We are building something here on NYSE TV as well, and so thank you to our viewers for following along. Of course, never a dull moment here at the Stock Exchange.
Never a dull moment.
But it looks like we're going to end the week on a positive, Trinity. Yes. I do see a lot of green on the screen down here on the floor of the Stock Exchange. Yep. And of course, this would mark the 5th straight week of gains for the S&P 500.
We like that, yes.
I know we've had a lot of good insight from our guests today. The most interesting thing, actually, that I heard from a markets guest earlier, Sam Stovall, who joined just after the open, he follows the trends so closely.
Yes.
And said, even though we've had such a strong 3 years of this bull market, the bull market officially turns 3 this weekend on Sunday, it can lead to some less than average gains in 2025. Now, of course, we'll see what happens. Yes.
Something to look forward to.
But we like to, of course, inform our viewers just one particular statistic. But I would say on the flip side, many, at least 3 or 4 of our markets guests of late have said they actually think the risk asset landscape looks very attractive right now.
And speaking of ending the week on a good note, that's obviously a lot of good news, Kristen, but International Day too, yes. But International Day of the Girl.
Yes, I know. I'm so happy that you brought that up. I was able to speak with a woman from Amplify Her Foundation earlier this week, and she talked about Maya Molina Schaefer, just how important it is for young girls to get the leadership and support that they need, of course, so that they can turn into women who are able to really flourish and thrive. And I'm so happy to do this show alongside you.
I know, me too. We love this. This is what we do here at the New York Stock Exchange, and we're at the forefront of these sort of events and conversations, that are so important on a national scale, but also a global scale. And this is, I believe, the 12th year of the celebratory day. Of course, the United Nations established this back in 2011, and so the fact that you were able to do this interview, Kristen, and we, of course, honor it here at the Exchange, co-hosting alongside you. So, I mean, all great things.
And we have a lot of great content coming up as well. We've got my conversation with the IMT president, Bowler, that's going to be filmed and recorded later today. Trinity, I know we got some good pieces from you as well. So we are building, just as we've seen Beazer Homes build over the past 30 years. And I think we'll leave it on that note today. Everyone, thank you for watching. I'm Kristen Scholler.
And I'm Trinity Chavez. We'll see you tomorrow.
Have a good weekend.
In life, I'm reminded that it's not about the destination. It is truly about the journey.
my pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be